This is the Week in Sustainability from Sustain.Life. It's where our team of sustainability experts and practitioners share commentary to keep you up to date on developing stories and news.
Hi, I'm Nicholas Sontag, Senior Manager for Sustainability here at Sustain.Life. Today, I'm joined by Hannah Asofsky, an analyst on our sustainability team. Hannah, how's it going?
Going fantastic. Sunny as always. How are you, Nick?
Doing great. We've got two stories today about the climate's impact on insurance, as well as an update on the Inflation Reduction Act. But before we get into our stories today, I wanted to share a reminder with all of you that we're going to be hosting a webinar next Wednesday, May 17th, on science-based targets. So in this webinar, we're going to cover not only how to set a climate target, but we'll also be debuting our new targets feature that's designed to assist you with not only setting climate targets, but setting meaningful ones, which is what we really care about. Targets that are aligned with the latest climate science. So if you're part of a business that wants to set credible climate targets, make sure you tune in. You can sign up by going to our blog at Sustain.Life. And on to our stories. Hannah, what do you have for us on the cost of property insurance?
Yeah, this isn't necessarily breaking news, but there was an opinion piece in the Times, and if they're going to have this conversation, I want to have it too. And so this is a piece speaking directly to homeowners across the country and basically saying, you know, hey, I know you think you live in a place that maybe won't be facing incredible impacts of climate change yet. But there's still economic reason for you to be tuning into climate change. And PS, your insurance company already is. So this year, we've seen 20 events per year. Or in the last few years, we've seen 20 events per year that cause over $1 billion in damage. That's in comparison to 1980s numbers, where that number was closer to like two to four a year, or earlier in the 2000s, maybe creeping up into 10. But 20 a year is
Wow.
insane, and insurance companies just don't have the capital to continue supporting this explosion in payouts, and all insurance homeowners are facing the consequence.
This actually reminds me of a report that we talked about on the show last November from the research and design group Rebuild by Design that
Mhm.
found that 90% of all US counties had experienced a climate disaster in the last 10 years. So, which is far more than I would have assumed before reading that. So it sounds like not only are these disasters becoming more and more frequent, but they're also becoming more geographically widespread. So, how is this impacting property insurance, and are we also seeing changes in insurance happen across the country?
Yeah, absolutely. So you're totally right. Everyone is going to feel climate change, and everyone probably has. They just didn't necessarily notice that. So right, the national average for property coverage last year was around $1,900, and that's double what we saw in the early 2000s, where it was closer to 8 to 900. And I want to sort of stop there because I understand that statistics monks would call out that that's not a good average. I would expect to see that states like California and Florida and Texas are pulling that average up. But
Yeah.
this is a trend that holds up across the board. Even Utah, they've always been one of the least expensive home insurance coverage states, but the floor is rising. Even after
Wow.
accounting for inflation, it's just more expensive everywhere to cover your home.
Okay. So rates have risen everywhere by, on average, double. I'm scared to ask about the states that we know are, you know, uh, deal with a lot of climate disasters like Florida and California. So, like, what is going on in those states in particular?
Right. Rates are raising for everyone, and that has the potential to price anybody out of insurance. And so, even in those high risk, in the high risk states, you're seeing that problems are rising because people are just foregoing insurance. They're priced out, they can't afford it, and they just don't buy it anymore. But that means that you're opening up to just incurring the full cost of whatever comes your way. We're seeing in states like Florida, 14% of homeowners are uninsured, and that's double the national average. I don't necessarily know why Florida homeowners are, opting into not being insured, but they're incurring all of our costs when a risk comes their way, and it's Florida. A cost will come their way. And then the second reason that this is really risky to homeowners is that insurers are not climate deniers. They see where costs are rising, and they're up on the science enough to know that that trend is going to continue. So they're making choices to just stop offering coverage in certain states. Um, and that's their choice, but that is where state by state partisan politics gets like really interesting and can really impact homeowners. So we've seen in states like California, insurance companies want to stop covering areas that are at really high fire risk, and the state swoops in and just tells them they can't do that. And then on the opposite, states like Florida, many insurers have been really successful already at pulling out. And Florida's solution to both insurers and residents feeling this pain of increasing rates was just to create a taxpayer funded bailout program for the insurers. So it's based on where you are and the
Yeah.
risks you're incurring, crazy.
This really brings me back to my environmental studies 101 class, where we talked about this idea of internalizing the externalities, which is when we don't price the environmental damage from something like fossil fuels into its costs, then we force the whole of society to internalize those costs. We're going to pay those costs at some point down the line. And in this particular case, it's happening in the form of insurance premiums.
That's so funny. I also learned about, sort of the connection between climate change and insurance coverage in a conversation around externalities in my first environmental policy class. And it's a perfect case for everyone. I just want to be clear also that we've said homeowner a lot recently, and what we mean is property owner. This is going to impact businesses. This is going to impact renters. All landlords
Right.
are facing these prices. So
Yeah.
it's not just people that own their homes.
Yeah. Great point. It's not just homeowners, it's businesses too, which leads me to our next story, where conversely, we want to talk about falling costs for businesses. So we've touched on the Inflation Reduction Act a few times on the show already. To refresh everyone's memory, this is Biden's signature climate law that was passed last year. It's a bill that contains significant incentives and investment to encourage the growth of clean energy technologies like solar, wind, batteries, EVs, all that good stuff. When the bill was passed, we noted that it doesn't do everything we need to get to net zero, but it does do a lot. And we thought that the incentives in the bill could be enough to trigger a feedback loop where costs fall, causing more production, causing further cost declines, causing more production, so on and so forth. So that's the background on the Inflation Reduction Act.
Really appreciate the catch up. Has it been, it's been 8 months. Is that long enough for an update on these results?
For sure, yeah. So we got an update last month um, from the budget office, but just taking a step back, in the past 8 months, companies have announced over $150 billion in new clean energy projects, which is incredible. Um, and right now, the update from the budget office was that the use of tax credits from the law is basically outpacing expectations by about 50%. So this is great news for anybody who cares about the climate. It's great news, for those of us that were hopeful that this bill might be a catalyst for cheapening of these technologies. And not only is there a lot of investment happening, but it's really interesting where that investment is happening. So the majority of investment is happening in the South and Midwest, areas that we typically associate with declining industry. And the majority of new projects are actually occurring in Republican districts. Ironic, because not a single Republican voted for the law.
Right. I think this is awesome news. The version of the bill that was passed was a huge victory, but it was kind of reduced from the version that a lot of climate experts said was necessary. And I think it's really exciting that if we set a goal in this piece of legislation and we're reaching it and we're surpassing it, but it sounds like there's a catch.
Yes, there is unfortunately always a catch. For these tax credits, that money has to come from somewhere. And when those tax credits are being used beyond expectations, it has some significant or potentially significant budgetary implications. Specifically, the law actually did not place a cap on any of those tax credits. So this is worrying politicians who are, concerned about the possibility of a ballooning price tag for the bill. In fact, last month, Republicans in the House passed uh, a debt ceiling bill, which included a rollback of many parts of the law, including these large tax credits. So they did this on the grounds of fiscal responsibility. I think it would be important for us to be a little bit skeptical and acknowledge that some of them probably have ulterior motives in rolling back the law. Now, that debt ceiling bill isn't going to go anywhere. It's, probably not going to pass the Senate. And if it did, it would get vetoed. But it does mean that parts of the bill may be at risk as those debt negotiations move forward.
It's surprising to hear that repealing parts of this law, this is gonna, I imagine, amount to some serious complaints on these Republican legislators. Like you said, this money is going towards their communities. It's giving their communities resilient jobs. Um, are there numbers around what's going on? Is this kind of, what can we draw around the cost of this bill right
Yeah.
now?
Yeah. You're totally right that repealing parts of the law could put a lot of Republicans in a bind because their communities are getting a lot of investment as a result of the law. Again, another case of some irony with this bill. In terms of, the total cost of the bill, the initial estimates when the bill was passed were that it would cost about $400 billion over 10 years. This updated cost from the budget office that came out last month said that it would basically cost 50% more than that, or $180 billion more than that. So $580 billion roughly for the total cost. Now, that's just based on the current pace. It is really important that we note that a lot of experts don't think that it definitively will cost more. Some experts are still saying that it might cost less than what we're anticipating, um, because right now we may be experiencing just an initial surge of investment that could slow in the coming years as things like demand for these technologies stabilizes, as things like um, the labor market for this type of manufacturing starts to dwindle a little bit. So it still remains to be seen whether it actually will cost more than we're expecting. Overall, though, I think if you care about the climate, you're generally excited about this news, and I think it bodes well um, for the economy, for the environment, for all those things we care about.
Yeah, that is exciting. I remember the comparisons, and I don't know where they are, that show that a faster transition is is less expensive than a slower one. And I'm hoping that this is maybe putting us on the right foot to accomplish this quickly.
Totally, that is a great point. And that wraps up this week's episode of The Week in Sustainability. Quick reminder again, our webinar next week on May 17th about setting climate targets and our new feature designed for that. Make sure to sign up if you think that'd be interesting to you. And we'll see you all next week.
Sustain.Life is a sustainability management SaaS platform with deep carbon expertise that helps future-proof small and medium-sized enterprises by taking climate action. Go to Sustain.Life to learn more. Thanks for listening and watching. Don't forget to like and subscribe to our YouTube channel or your favorite podcast platform. We'll see you next week.